Yo, what's up, everybody? It's getting nice down here in Florida. The winter's over for us, it's starting to warm up. Feeling good. I'm back outside doing outdoor videos. I got some tomatoes growing in my backyard, basil, rosemary, a bunch of other stuff. Anyway, let's talk. Let's talk about what's going on. Fiscal flows, let me cover that first. The flows are strong. And as I've been saying, tomorrow we get first of the month payments for February 1st because February 1st falls on Saturday. So it'll be a big flows day. I said that this week we'd end up very strong, and that's how it's going to be. Then next week we might see some continuation of this momentum, maybe a little dip midweek. And then February 14th, we get a quarterly interest payment. So that's when the flows will peak from that period going into around March 1st. And then as we look past that, we get into what I think is going to be a dicey period. That's the April-May, where we're going to have basically like a double tax drain. By then, I don't know, the market could be a lot higher. It could be very frothy. So we'll see. But like I've been saying to you guys, I'm watching every day to see if there's been any deceleration in the fiscal flows. There hasn't been. We had this, the Trump freeze on spending, but a judge blocked that for now. I think there's going to be a hearing on that on Monday. I don't know if he rescinded it. It was reported that it was rescinded, but then I think his White House press secretary, she said that it wasn't rescinded. It's on hold, so we'll see. But like I said in the last video, it doesn't matter because I see the numbers every day in the data. I see the flows, and I'll know that before anyone else knows that, because nobody really looks at the daily Treasury statement or has a breakdown of the daily Treasury statement like I do. And I provide all that stuff to my subscribers, so they know. We'll know because we'll see it. I mean, it's basically real-time information. So for now, it's just a positive environment. You see that with gold running up. When we had that pullback, in the low 2700s, I was saying that's a buy opportunity. I think right now it's getting a little bit ahead of itself, but as long as the flows remain strong, you got to buy gold on pullbacks, okay? Bitcoin popped up. I want to talk about the ECB. The ECB cut rates again today to 2.9% on its policy rate. That's the fifth rate cut. And I think it's very interesting. And, one scenario that I have, which is kind of, if it turns out this way, it would be the height of irony, I think, because the ECB is actually doing the right thing. By cutting interest rates, it's doing this ostensibly, it's doing this to, quote unquote, stimulate economic activity. The euro area is in negative growth. And that's not going to help economic growth. But what we will see happen from this is a very noticeable and maybe dramatic decline in inflation in the euro area. And, once again, I'll contrast this to what Powell is doing, this idiot at the Fed, where I believe right now his sole reason, or one of the reasons, I think there's two reasons. One reason for being as stubborn as he is and sticking with the pause in rates, the elevated rate level of interest rates, is because he basically wants to stick it to Trump, and he wants to present the Fed and himself as this fiercely independent institution, which no matter what is going to stick with its policy, especially in a situation where it contrasts with what Trump says. Okay, that's number one. Number two, you have to understand that Powell is really very much aligned with these, diehard monetarists, these people I always talk about, people like, these hedge fund guys like Paul Tudor Jones and Drunkenheimer and Jeffrey Gundlach, okay? He's running cover for them. And I truly believe this, okay? He's of the same mentality. He's cut from the same cloth. He operates on the same kind of, institutional understanding, which is wrong, okay? They were all wrong with the rate hikes. They got into the market late after a long period when they were very bullish, and they said that there was going to be a crash and 100% guaranteed there was going to be a recession in 2023 and blah, blah, blah. We know the story. He's running cover for these guys. He has bought in, and I could even go back to when he started to raise interest rates in 2022. There was a gigantic lead up, a crescendo of voices coming from the same people at that time, or just before he started to raise interest rates, screaming, pounding the table that the Fed has to raise interest rates. The Fed has to raise interest rates. So, of course, he caved in. And maybe some of you remember that before he caved in, he said that it was transitory, which he was correct in that, because the inflation was brought on by the pandemic, which was a result of shutting down the entire global productive system, okay, the supply chain, people sent home from work, businesses closed, businesses shuttered, okay? Yes, there was a large fiscal stimulus at the time, but as I've said so many times, as I've argued, you cannot say automatically that a rise in government spending is automatically and necessarily going to result in inflation. Yes, that will happen if you have a rise in government spending and at the same time you shut down completely the productive ability of the economy so it cannot supply the goods and services to meet that additional demand. I mean, that's common sense. That's logical to understand that. But since that time, we still have 7 trillion plus leading spending flows, and inflation is trending down. I mean, now we had the PCE price index today was 2.3%. Okay, 2 point. That's the Fed's favorite inflation indicator. That's the other thing that gets me. All right, this guy keeps talking about sticky inflation and stubborn inflation, whatever adjective he uses, but it's trending in the direction that the Fed wants it to trend. So what he's doing is complete bullshit. By the way, yesterday at his press conference, and I sent this out in an email, but I'm just going to repeat it because I think it's worth repeating, and I think it's worth mentioning to show how this is lunacy, okay? He said, he was asked a question about mortgage rates. And what he said was that, well, the Fed controls the policy rate, which then percolates through the rest of the yield curve. But the reason why mortgage rates are going up has nothing to do with Fed policy. So in one sentence, he completely contradicts himself. I swear this is exactly what he said. Maybe you can go, find the video of him at the press conference. He said when he was asked a question about why mortgage rates are rising even though the Fed has cut interest rates, he said, well, we set the policy rate, but that percolates through the system. In other words, the policy rate really sets the other rates by virtue of expectations, okay? And then he says, but the reason why it's going up, the mortgage rates, has nothing to do with the policy rate. It has everything to do with the policy rate because the Fed pivoted, okay, after getting everybody all jacked up on rate cuts, right? We came into this year, before this year, there was supposed to be like freaking 5 rate cuts this year. Now we had the one, now there's not going to be any, okay? At least as far as the market is forecasting right now. So the Fed jacked everybody up on this expectation of rate cuts as far as you can see, and then all of a sudden slammed on the brakes and not only said we're going to hold here, but continues to communicate this worry, this concern about inflation. Okay, so that is communicating to the market, we better keep the longer term rates elevated. It has everything to do with the policy rate. It has everything to do with the Fed's stance. And again, this is Powell running cover for his hedge fund friends and also just wanting to push this right into the face of Trump. I don't know what Trump is going to do. In the past, when in his first term, he was very vocal. I think he called Powell into the White House a couple of times. We'll see what's going to happen. But, Trump is a low interest rate guy because, he's come up in the real estate business. So, and he said a number of times that rates are too high. As a matter of fact, I remember in one press conference before the election, when he was specifically asked, what are you going to do about inflation? The first response he gave was, well, interest rates have to come down. So he understands that rates are a factor in prices. They're the most important factor in prices because, as I've said a zillion times, the cost of credit is reflected in the cost of all goods and services. But anyway, I was talking about the ECB. I think it would be a tremendous irony. Here's what I wanted to say. So Christine Lagarde, who's the president of the ECB, she says there's no way that the ECB will add Bitcoin as one of its reserve holdings. She said it's too volatile. It's not liquid enough. It is open to use by criminals and this kind of shady activity. She said it's not an asset for the ECB, which I find it to be very, very interesting because right now, as you know, like the United States under Trump says we want to be the world leader in crypto, and you have other countries now following Trump and saying, yeah, we're gonna also start holding crypto as a reserve, Bitcoin, whatever. But the ECB now kind of separating itself from this developing trend about wanting to hold crypto as a reserve. And wouldn't it be ironic, and I'm not a big fan of the ECB necessarily, or any of these central banks, because I think they're staffed by complete morons. But wouldn't it be ironic if the euro ends up to be the most stable global currency? Because there is risk. I've said this before. There is risk, and I think it's big risk in the United States pushing for crypto as a kind of an alternative, what do you want to call it? An alternative to the US dollar, an alternative holding, an official reserve of the US Treasury. I think potentially that has some very negative implications for the dollar. And the fact that the ECB, Lagarde, is saying, hey, we're not going there. We're not doing that. I mean, I don't know if it's going to happen, but I could see a scenario where that completely backfires on the U.S. in terms of what it does to the dollar. And the ECB, the Euro system, staying out of that makes it a stable currency system. We'll see. I mean, of course, this is not going to play out next week. It's not going to play out like next month. And we still have to see what the United States will do officially with Bitcoin. I mean, so far it's been kind of campaign rhetoric, maybe a little bit more than that, because Trump did appoint people within his administration to oversee what looks to be like a movement towards having the U.S. officially active in Bitcoin and crypto. So we'll see. Anyway, that's it for today, folks. It's great to be back outside. And the warm weather is back here in Florida. And hopefully wherever you are, not too much longer of a wait. Was it like 50 something days until springtime? Official springtime. It doesn't mean it's going to get warm. I remember when I was living in New York, and March 21st, March 22nd, whenever the official day. And yeah, it's spring, but it stays freezing pretty much until June, okay? But anyway, it's pretty nice down here. So that's it for today. Please like and subscribe if you've already done that. Thank you very much. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.